Guest saying she thinks the market would be best served assuming 3 cuts is optimistic. Joining us now, Biel, chief market strategist with Kane Anderson Rudnick. Julie, let me ask you, where are we on inflation? We heard Powell speak today as well, and he said that the recent data doesn't materially change the overall picture. But at the same time, we've been tracking commodity prices this week in particular. Is that going to have an impact at some point?
Yeah, I think commodities could really ruin the party for everyone in the sense that where we've seen the most stubborn inflation has really been on the services side. And that's actually pretty typical in normal economies where services tend to run a little bit hotter than goods. But if we're on top of that, having commodity prices increasing, that really filters through the entire supply chain, and that causes problems in terms of being able to bring down pricing. So they're in a bit of a tricky spot where they have to keep an eye on that and maintain a strong focus on inflation, because I think that has the long-term impact that could really ruin it for everyone.
So is 3 cuts optimistic then? Yesterday we were at, I think, 2.5. Now we're back at 3. What are you expecting for this year?
Well, I think, it's hard to guess. It's really a factor of how data dependent the Fed is going to be. There's not a ton of consensus on the Fed board among the officials, right? Only 10 of 19 think that we're going to have 3 cuts. You heard Bostic talking about only 1 this year. Next year for 2025, you have 4 members of the Fed who think we're going to be above 4% on the Fed funds rate by the end of 2025, right? So the consensus just isn't really fully there. And I think that's just a function of the data is kind of pointing in different directions. So I think for us as investors, the trick is focus on businesses that have low leverage and don't count on the Fed to save the day.
So that's interesting. I guess I'm hearing you slightly as though you're in the Einhorn camp, the Cohen camp, which is that you're a little skeptical that inflation is going to get down to 2% anytime soon, which may stay the hand of the Fed a little bit. So if I'm characterizing your position correctly, how do you make money? You mentioned a couple of things there. Low leverage is one. But how do you make money in a market like this?
Well, I think what's really tricky is trying to figure out how valuation is going to be impacted by interest rates, right? And the place where valuation has been the most beat up is in the small cap stocks. And to me, that makes sense because earnings there are still not turning around and positive, right? Investors are flocking to where there's earnings growth. That just makes sense. That's logical. That's normal. What we do see is within small cap, it's not a space you really want to invest in passively. You want to pick stocks kind of one by one. And you can see businesses that have solid growth behind them. Ollie's, OLLI is the ticker, is a great business that, has the earnings growth in front of it. Same thing with a company, Certara, which does biosimulation software. Again, low leverage levels, solid earnings growth. Those are the types of businesses that I think over the long term, you can really be well positioned in.
Julie, we've seen a good year for longs so far, fantastic first quarter, and tech hasn't been sort of having the leadership that it did last year. Is that a good indication to you? And where would you be putting your money for the rest of the year, aside from those small caps?
Yeah, I think the trick is really focusing on where you have strong fundamentals, right? And I think part of where you're seeing that softness in tech is that people are kind of recognizing that AI has some positive near-term implications for some companies, but not for all. And so we are focused on businesses that can deliver near-term earnings growth as well as long-term earnings growth that's real and materializable. I think positioning too is thinking about what sectors are going to protect you if there is any kind of downturn. Healthcare is kind of a tricky one, right? Where pricing has been really under pressure. There's more government regulation, but you can find good pockets of healthcare that are less impacted by that. I think of a West Pharmaceutical that does drug delivery. I think of a company like Azenta that stores sample storage for large pharma companies doing their R&D. You can find these kind of quirky, smaller businesses that have good earnings growth and a strong competitive position.
Julie, great to see you. Julie Biel, thanks very much.
Thanks so much.
You got it.